right now. The recorder is running. So this would be a great time for anyone that has any questions. Your questions can be anything you want. It can be about a chart. It can be about a topic. Try to be as direct as possible. Whatever you would like to talk about, please don't be bashful. Shoot. All right, here we go. Ricardo says, so I recently started looking at options. Is there something I can help you with? Would you like to share those trades? Anything you have, Ricardo? I have to tell you about options while you're typing. And please ask away, Ricardo. You guys know I've been trading now for I think I'm coming up on 35 years. I think that's what it is. And I've never traded an option until just a few years ago. Seriously, I was the poster child on why you should never trade options. And since I've started trading options, talking about open your eyeballs up and talking about a massive change in trading, just a huge change, and it's all positive, absolutely positive. I just love them. In fact, that's all I do anymore. I don't even trade stock. I just don't do that. Options are the way to go, in my opinion. And again, you guys know that it's just my opinion. It doesn't mean it's the right thing to do. Okay, we all know that. All right, so let's see. Daryl there says, what are the tools of the trade in your tool chest for a fresh start? Boy, that it's like it's a big chest, Daryl, and we'll touch on some of that here. Okay, let me kind of work with this option chain just for a minute here, and then we'll do that. Okay. I find Ricardo saying I find my platform only gives me the option price, but not how to place a stop. It is not based on the stock. Yeah. Actually, some programs do. I believe Thinkorswim says you can do that. I believe that you can set your stop based on the chart and it will cross over to the option. So let's say, here, let's look at this chart here. Where is it? Where is it? What did I want to look at? I'll tell you what, we'll just look at COP here. So say COP, you buy, say here, and say you want your stop right here, for instance. I think Thinkorswim says, okay, your stop can be based on the stock, so you can do that. Here's the thing you have to remember is that if you're looking at 2.9% on the stock, the odds are you're looking at, you could be looking at 8, 9, 10% on the option. So just keep that in mind. I was just, well, it's been 10, 12, 15 days now, I guess. I talked to one of the guys at TradeHawk, and TradeHawk is what I do, and the new version coming out, which should be out any day, I suspect, that you can bring up one of their charts and you can mark your stop based on the stock, and it will correlate with the option. It'll you know, if the stock moves down and that's your stop, it'll stop you out. You'll still have the option prices, but it will stop you out. And it's the same for if you want to buy a stock. You know, if you look at this and say, well, I want to buy a stock if it breaks out of 104.04, you can set it up that way and it will just buy it. And they have a chart. By the way, their charts, I got a sneak peek of their charts here, I guess maybe 3 weeks ago now. And their charts look really, really nice. I made a point to tell them that, wow, clean, nice looking charts there on TradeHawk. But anyway, you can set your buy here, and it will trigger into your stop. So, but I do think Thinkorswim can do that, and I imagine any good quality program um, could do that. Yeah, I could imagine that. Yeah. Let's see here. Well, I don't know what your platform is, Ricardo, and I'm not. Oh, for instance, uh, uh, let's see. For instance, TC2000 Trindicator. Do I need live quotes? Um, you're mixing things up there, Daryl. For instance, TC2000 Trindicator. Do I need live quotes? The word Trindicator and do I need live quotes should not be in the same sentence. They are totally opposite. Um, maybe I see what you're asking. There, okay, yeah, yeah. The Trindicator is something I can help you set up right now if you like. It's real easy to do, and I'd be more than happy to help you set that up right now. And um, for especially if you're working, absolutely you do not need live quotes. If you're working, you do not. As Ed says there, 15-minute delay is just fine. Yeah. Let's see here, Ricardo. If my platform only gives me, oh, we did that. How do you know when to cut a trade versus hold and wait for a bounce? Um, I have an absolute answer for that. Okay, an absolute answer. And what I'm going to do is go to a chart that I am currently in right here, GILD. I'm currently in this trade. So I want to read this question again. This is a good question. All good. This one I think is right up there top notch. Okay. How do you know when to cut a trade versus hold and wait for a bounce? Okay. First of all, if you are right now listening to me, you're a short-term swing trader. You are not a long-term trader. Okay. If you are, we need to talk. You're in the wrong place for that. So with that said, you really don't want to marry a chart. You're not looking for uh, a wife or a husband. You're not. So with that said here, as you know, when you buy a chart, what you want to do is set up, let's see, I'm going to change this right here to red, and let's make this big and fat. So when you buy a chart, you might set your targets and what you might be looking for. You also want to set your stop. So so my stop, let's say 61.30 here. So if price closes below that, I might be stopped out. You want to set that up before you go any further. So when you're looking at a chart, you may say, okay, I like this chart. I'm going to buy this chart. Well, when you say you like this chart, that means you like a couple of things in it. That means you like the chart pattern. You like the idea of the upside. You can see the upside potential. But you want a stop just in case you're wrong. Okay? So before you pull the trigger, you've got to see all that stuff. Now you can choose to do all this before you pull the trigger, or you can see it all, pull the trigger, and then go put it on the screen. But you have to know what it is. So my stop is around this 61.30, just a smidgen lower than that. It's around that 61.30. So if price closes below that line, I will be stopped out. So to your question, how do you know? Do you allow that stop, or do you wait for the bounce? Here's the thing we don't know as a trader. We don't know this. We can put a trend line up here, and we can close here, and then you could make an argument that there's support right here. You could make that argument. All right, so let's hold on to it. Let's do that. Well, what happens if we break down? Remember, we broke this area here, and if we did that, this is what we're going to look like. A red candle, right? So we break through there. All you've got going on is a downtrend. How do you know it's going to stop here? Well, because I see support. Let me stop you right there. That means absolutely nothing. All the support in the world means squat until you have price. So we have this hammer here. So we get through this area and you tell yourself, well, okay, I see. There's that hammer, so I'm going to hold on till we get there. So what happens? Price moves down. And you know what? Price has been down a lot, so it pops up. Now all of a sudden you think you're the smartest cat in the room. I mean, you just strut and you're so smart. Well, what happens is that because this is a downtrend. So then what happens is now that happens. Now now you're not such a smart cat. Well, now you're going to come in here and you're going to make this argument, well, that's got to be support. First of all, you can't use gotta and support in the same sentence. That's just horribly wrong. You see where I could go with this? You see how I could make this argument and share this all the way down? So how do you know when to stop out of a trade versus hold on for a bounce? You set that up from the get-go. And you set that stop in there. And if you close below that stop, take this to the bank, okay? Take this to the absolute bank. You want to be stopped out. And you know what? There will be those occasions where, by golly, you're stopped out and that damn thing just runs right up like that. And it will go. And then you will say to yourself, well, I'm never doing that again. The next 52 trades that you do that with will eat your lunch. This is something you take to the bank. You set that trade up. When it fails your line in the sand here, you get out of it. Otherwise, you're going to see a 10% loss turn into a 15, turn into a 25, turn into a 30, 40, 50, 100% loss if you're not careful. The number one rule in stock trading is not making money. It is not. The number one rule in stock trading is don't lose money. That's the number one rule. The number one fact is you're going to have losing trades. So when you have that loss, you need to cut it short quick. Otherwise, they get out of hand. I hope that answered that question. Great question. Okay. Let's see. Lenny, you're new here. Glad to have you here. Hey, I don't want to. Somebody asked me here, what's in my treasure chest, tool chest? I don't want anyone to think. I don't want you to think I'm ignoring you. I'm looking for your question. And we'll certainly talk about that. Okay. Do you factor in open interest in a decision to buy an option? Yes. These things right here could be considered in my tool chest, okay? Just so these are my tools. Like this, get out of those losses quick. That's in my tools. This right here is in my tool chest. Let's take Facebook as an example. So I'm going to come over here. I'm going to do this. Here we go. So let's say you're looking at Facebook long, and we're going to come over here to June. Yes, I do look at open. I assume, no. Oh, implied volatility. I do not look at my implied volatility. I do not. I it. I have no interest in implied volatility, none whatsoever. Here it is right here, 44. I don't. Like I said, I don't. I just have absolutely zero interest in it, Mike. I'm not saying that it's not something you should or should not look at. I'm just sharing with you my tools that I have nothing to do with implied volatility. None. With that said, Mike, I only look at quality charts. I don't look at junk charts. So what is a junk chart? It can be a quality chart, but if it doesn't have good volume, good enough, then it's junk to me personally as a trader. I only want to look at quality charts. That's it. How do I arrive at those quality charts? I only look at the top 400 charts traded on the CBOE option list, and I only look at the S&P 500. That's really all I trade. I really don't trade anymore. I have played around and I have tried to put together some kind of list that, you know, other charts, but every time I do this, I find that if I just stick with the CBOE top 400 and the S&P 500, it gives me about anywhere from 8 to 1,000 charts to trade, and they're always good quality, and I never have to worry so much about the implied volatility. We do offer that list every single month. It's offered in two places. One place is I can't bring the camera. I can't do this at the same time and show you, okay? Because it's like they can't fit in the same world. The camera and the screen I need to show you. But it's the room you are in. If you look up at the top, you'll see where it says Files. Click on that. Yeah, Files. Click on that. Well, they won't be in this room, actually, now that I think about it. In which case, I can show you that. Ha! I can show you. See here, this is the hit run candlestick trading room right here. Okay, so come over here to Files, and right there. Now find the newest one, and this will be the newest one. The CBOE top. It's the top 400, or maybe this is the only 200. I think this is the 400, or maybe it's the full list. What you do is this will come out when you download this. Download it, download it, download. There we go. It comes out on an Excel file, like so, like so. We're waiting. It's thinking. Tick-tock. There we go. There we are. Now you can take this and you can see that it's already set by volume here. Come down and grab the top 200 if you want. You can only grab, I mean, I don't even know how many's on here now. So there's a lot on here. Go to the, I use the live trading alerts, and it's the top 400. So if you wanted to go to 400, then just come over here to 400. Boom, 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 boom. There we go. To the 400. And there we are. So what you want to do is copy all these trades into your watch list, and that's the stocks you look at right there. Everything above this. Everything above that. You can take this list, you can come down here to the top 900 if you want. But what you're looking at is the top 400 or the top X, however many you choose, stocks traded from the CBOE. That's in Chicago, and those are all good quality options. Hope that made sense. Hope I didn't mess that up too much. You're welcome. Tastyworks. I think Tastyworks is a top notch, Ricardo. I think unless you're asking me a question, I'm going to just tell you. I'm just going to think that you're telling me something, that you use Tastyworks, and I would have to say that that's a top notch um, uh, charting pack, charting and or trading package. I really have to say that they're top notch. So you should be able to, if you know, give them a call, see if they can help you with that. Dennis, I've lost lots of money with stop losses trade. For an additional 7 to 8 days, I would have been profitable. Well, you know, then I guess the thing to do is set your stop losses a little bit lower, not so tight. So as I'm reading your statement here and thinking, actually the first thing that came to my mind was not the first thing I shouted out here. First thing that came to my mind is perhaps you're making poor entries into charts. The second thing came to mind is maybe your stops are too tight. So without knowing or seeing one of those trades, we can look at it here, then it's hard for me to pin that down or at least give my opinion on it. But based on what you just wrote there, I'm going to have to say, one, you're buying at the wrong spot or your stops are too tight. That would be the two things that jump to my mind just based on what you said there. Please do not stop asking questions. So what's in my tool chest for trading? First of all, I'm going to show you something here. Let me bring this up. Look, I'm not, you guys, some of you may use live trading alerts. I don't know. Maybe you don't. I don't know. I'm not privy to know who uses it, who doesn't use it. I use it. If you want to know one of my top tools, this is it. Okay, I'm not going to go into a great deal of detail here really right now unless you want to. I can certainly do that. But this has got to be one of the best treasures that I have for trading. It might be one of the crown jewels in the toolbox. It might be. So I'm going to leave it there. If somebody has questions about it, I'll certainly be glad to answer it. I'll probably refer to it somewhere going forward here for sure. Well, in fact, you know what? I might as well leave it out because one of the other crown jewels that I have is only trading charts that are set up. Now, I guess you have to know what a setup chart is, and this is just my opinion, okay? While I can prove this chart pattern works, it doesn't mean it's the only chart pattern out there that anyone should ever use. I have just proved hands down that it works without question. And let's do this. Let's take a look at APA here. And what the chart pattern is simply a chart that's trending. I want a trend. The trend is truly your friend. Trying, looking at this chart and saying, man, I wish I would have bought this here, is about the biggest mistake you could ever make in trading. That might be the number one mistake of trading. So what you do is you try to find charts that are doing just this. And for every chart you find that works, I'll show you 50 that fail. That puts the probabilities against you. So what you want is you want that trend to be established. Okay. Now, I use the trendicator here, which is nothing more than the 17 exponential moving average. It's not like it's magic. It's not like it's super secretive or anything. It's just the 17 EMA. So with that, it's pretty easy. You can If you want to use that 50-period moving average, you certainly can. However, I don't think the 50 is the best for swing trading. Short-term swing trading, I should say. Of course, then again, what's your definition of short-term? One of the biggest tools I have in my toolbox is looking for those rallies and those pullbacks, just like that. Just like this. Just like that. I could do a short one here. And here we are up again. And then what we want to look for is the pullback and follow through. Pullback and follow through, pullback and follow through, pullback and follow through. That right there is probably my biggest, well, one of those really important tools in the tool chest there. Right there. Okay. Please, guys, ask me questions, all right? Really. Other tools in the toolbox is understanding price action, and I wish that I could sit here for I would sit here for 5 hours if I thought I could teach you price action in 5 hours, but I can't. I can't do it. Price action takes a little time. Is it going to take a month? Is it going to take 2 months? Is it going to take 3 months? Is it going to take a year? I don't know. Everybody is a little bit different. But sure, Ed. But price action, there's so many things about price action. You know, there's adding multiple candlesticks together. It's where you're getting the price action in a chart. There's just so many variables with price action. And over time, it is clearly learned. If you do learn about 15 different candlestick patterns, then candlestick signals, then you've got the absolute what you need to learn what overall price action is. And candlesticks is the absolute best way to do that. Truly the best. But to actually master price action, it takes a little bit. It could be a month, could be 6 months. The main thing is if you have a set of established rules, you will see how price action works in those rules. So let's take this APA here. One of the other tools in my toolbox is buying breakouts. So we have a breakout here. And by the way, I don't use the tops, not to say that's good, bad, or indifferent. That's just me. I don't use those very tops up there. I use the bodies more times than not. There are times I might draw a line or use that top. Again, that's just being comfortable and familiar with charts. And that is not, it's not something, there's not an absolute. It's not something I can say, absolutely, in this case, I'm going to use that top. Absolutely not, I'm going to use the body. There's just some things that you just know. You remember that? Has anyone seen the movie A Few Good Men? One of the best lines was something about the rule book. Remember in that line where the lawyer Tom Cruise, I think, grabs the book and says, "Can you show me in the book here where the mess hall is?" There's nothing about the mess hall in there. We all know where it is. That's sometimes what this is about. It's about, look, if you know where to go get chow, you know where to go get chow. That simple. So there's some things that just cannot be taught in 1 hour or in 5 hours, that just you learn naturally as you trade. This is why the #1 rule is don't lose money. 95% of all traders, so I've heard it's 95%. I don't know that for fact. But I've heard 95% of all traders that start trading quit trading because they lose money. The reason that happens is because nobody, except you guys, and thank you very much, are willing to come someplace and try to learn about trading before you go out there and try to trade. Everybody thinks, hey, I'm going to follow Joe Blow. Everybody thinks I'm going to put this trade on because I just downloaded a $14.95 book on how to trade. So you go out there and trade, and you do this time after time after time after time, and pretty quick you're out of money. You have to quit trading. And then what you do, the common thing is you don't take ownership because you don't know what that ownership is. So what you do is you say, well, stock trading is rigged. It's only made for those creeps on Wall Street. To start with, that it's not only for those creeps on Wall Street, while I actually think they're creeps. It's not rigged. Believe me, trading is not rigged. It's just that you failed to actually learn how to trade. But we as humans, we just don't take ownership. Understandable. Absolutely understandable, okay? So #1 rule is don't lose all your money. Do not. So anyway, the pullback into the 3/8 trap, we're going to come back and talk about that 3/8 trap. And 3/8 trap breakouts, while this is not a 3/8 trap breakout, this over here would have been a 3/8 trap breakout. And we'll talk more about that here in a minute. These are one of those tools in my toolbox that I go after. These are the kind of charts I like, whether they're in an uptrend or in a rounded bottom breakout, maybe. Okay. So let's see. I'm just grab another question here. Daryl is asking, is that something you can scan for, say, the 3/8 trap? Absolutely, you can do that. Let me come over here. Take this is a 3/8 trap. Well, this is actually a 1750 trap. Let's see what Twitter. Let's find something other than Twitter. There we go. Let's look at VIS. So VIS, you can absolutely scan for the 3/8 trap. In fact, with the LTA scanner, you can scan for. I'm actually gonna say this. You can scan for anything you can think of. If it's not built in, I know that Ed can build it in. Okay, so there's not much. Well, there's not anything you can't do with it. So can you scan for the 3/8 trap? Yes, there's a 3/8 trap right there. I'm actually scanning for a 3/8 trap right here. It says RBB, so I'm scanning for a rounded bottom breakout. 3/8 trap, so I'm also scanning for a rounded bottom breakout and a 3/8 trap. This T greater than 50 means the T line greater than the 50. So now I'm scanning for a rounded bottom breakout, a 3/8 trap, and the T line greater than the 50. And because I can see my heading here says V stop, and we'll go look at everything in here too. Now that it says V stop, that means I'm a maximum percentage away from the volatility stop. So now I'm scanning a rounded bottom breakout, a 3/8 trap, T-line greater than the 50 period moving average, and within a maximum distance of the V-stop. Just a second, I need to get a drink. Thank you. So there's VIS. Let's look at APP. There's APP. Let's get rid of all that. So there's a three, while this is not actually a 3/8 trap here. I'll have to go look and see what I've done in there. Actually, it might be a 3/8 trap. I just don't have official 3/8 traps limiters in there. That is what this is. So here is a 3/8 trap, and while it is not above the T line, when it alerted, it was. That I can guarantee you without question. But it has pulled back since it alerted. And so there we are in the 3/8 trap. The V stop or the volatility stop, I don't keep on my normal chart, but this is the red line. And there you are, smack dab on the volatility stop, which we'll look and see what my limiters are on that. Here's Yum. There's Yum. Yum was inside the volatility, or it was a 3/8 trap below that green line right there and above that black line. Here's the V stop on it. So the V stop is 3% less. It's about 2.75% away. And here, let's just go look and see what I have that on. The V stop, I have it 3%. So it can be within 3%. It can be a maximum of 3% away from the V stop, volatility stop there. So that's what I have inside it. There we go. Any more questions on that? I could keep going on that. Daryl, and I just want to, let me finish up on Daryl's question there. Trap, I can scan for the 3/8 trap. I can scan for breakouts of the 3/8 trap. That's in my wheelhouse. There are literally, I don't even want, I don't even have any idea how many possible scans you can do. This is all of them right there, and they just go on forever. Now that's just scans that are here. Now can you imagine putting 2 together or 3 together or 4 together? I want the chart to do this, but not that. I want it to do this, I mean, it could literally go on forever on how you set one up, the possibilities there, okay? So the 3/8 trap, the breakout of the 3/8 trap, the rounded bottom breakout, we're just talking long trades. We haven't even talked short trades yet. Those are my favorite as far as, and bouncing off major moving averages. And guys, if anybody came in here late, I'll say my apology one more time. I messed up with the date big time, so there's some people that's not going to be here, and there's some people that clicked on the room link and you're here. So today is it's a free day. You're here. I'm not going to say, hey, let's cancel this. So today's a free day. I'm just sort of fielding questions and doing anything I can to help with. But throughout our classes, and today's class does not count throughout our classes, I will be covering things like the rounded bottom breakout, the 3/8 trap, 3/8 trap breakout, all that. I'll be covering and bouncing off major moving averages. Just the opposite of those, I will be covering the bearish stuff as well. Here is a scan that Ed recently did for me. Well, did for everybody. It was just, I just had an idea, or I had a thought, and then he made it even better, looking at some short trades. And I call it drifting, because this was my creation. And then after I shared it with Ed, I said, Ed, it's just not right what I did, and I can't seem to get, I didn't even know what I wanted for sure. I just knew that it wasn't doing what I wanted it to do completely, and I didn't know how to fix it. So Ed looked at it and he said, well, here, I've created you a different scan to do something a little different. and it's perfect now. Absolutely perfect. I've got this one's failing that 50 period moving average. And this is the kind of stuff we're going to go over here down the road, all right? So nothing will be left out. Nothing at all. This is the bullish side of this. While this is using the 50, this is using the 20 simple over here. And you can see TRV. I mean, there's your 3/8 trap. I'm all about that. Look at AA here. Man, look at that 3/8 trap. In this case, you can, which this is not scanning for a breakout. It just, this is where you just look at a chart and you have to determine that. But a 3/8 trap, we're trending up. I said we're using the 20 simple, so there's the 20 simple. I want the 20 simple trending, and that's what we're doing right here. So, and I don't usually keep that up on the screen, and I'm not going to, not ever. Well, I shouldn't say ever, but I can build it in the scan and never look at anything on the chart. In fact, I can come over here to a naked chart and I can look at these and I can tell you that they're doing just what I wanted them to do. The 20 is trending. It's a 3/8 trap. Now I can go in here and decide, okay, does that look like a trade for me? Till that breaks out, probably not. I could set this up if I wanted to be to have broken out of these highs if I wanted. Things like that. I'm sorry, I could just go on to this forever. So I'm going to bring myself back to these questions, okay? So Daryl, absolutely yes. You can trade, you can scan for the 3/8 trap. Ricardo, from what you've mentioned earlier, 15 to 20% negative is not unusual on options. You're very correct about that. What sort of percentage do you tend to work with? No, you're right. You're right. To give you some idea, this Gilead, I'm actually 21% down right now. And it keeps trying, but keeps failing. But because this is trending up, because we have this flag, I'm staying with it. Now, I am going to have to draw the line on it somewhere. That is true. Let's come over to this chart. See, it is a rounded bottom breakout, and that is an absolute plus for me right there. Absolute plus for me. That's one of those strategies I truly, truly love. We're doing a class on this Saturday, by the way, on the rounded bottom breakout. But I see the trend here. I see that the T-line's above the 50, the 17, or the trend indicator is above the 50 period moving average. We have a 3/8 trap, so I'm going with it. And it came up on my scan that does this a while back. I don't really know if it's on there. Well, it won't be on there right now because it's not making a new day high. So, but anyway, to your question, yeah, 15-20% is not unheard of for an option. This is something hard for option folks to do. Is they go from a stock, from only trading stock to options, they see that 20% and they freak out. They absolutely freak out. This is why it's so important to buy your stock near your support or your stop line, wherever your stop's going to be, where you see support, those sort of things. Let's see, are there any rounded bottom breakout setups you are looking at today? Well, let's go look here. Let's look at this one. Here's, that's not one. Just a second, let me get in the right place. IT. Well, that's not one either. I've got my eyes. Where is it at? Can't seem to find the right one. Oracle Oracle was one right here, and now it has failed. But if Oracle comes back up, Oracle would be one. And I've got this on my watch list for both long and short. Short, I've got it set up here, short, looking for a target around 73.80. But on a long, I will be long this absolutely 100%, looking for that rounded bottom breakout. And in this area here, you're looking at 4, 9, maybe 10% up into the top of that range right there, close to the 200 period moving average. Let's see if MDU is one of those as well. This is a rounded bottom breakout. You can see it's a 3/8 trap. The T line is above the 50. The Trindicator is above the 50 period moving average as well. I want to stop right there because you can have a rounded bottom breakout and the T line in the 17 does not have to be above the 50. But if you are about putting the odds in your favor a little bit more, at least for the get-go, right away, then this is the better way to go. If you are a bit of a risk trade taker, like right here, on this day, whatever that was, the 11th, the T line was not above the 50, and the 17 was not above the 50, but price was. This was an absolute buy right here. Sometimes they do work out pretty decent, and I would call this a pretty decent workout. We rallied up, we've gone sideways, good candle today. I think it's done great. But there's a lot of times this happens. It's a false breakout, and it comes right back down. A way to help with that is to make sure the T line and or the 17 is above the 50, because what that does is you've got that moving average crossover here, which I'll be going through all that in Saturday for those that's taken that Saturday class, the rounded bottom breakout class. We'll be doing that. And it just puts probabilities in your favor. The negative, you don't always get those early buys. That's the negative of that. But then on the other hand, if this was to be bought just today, let's just say the middle here, and I'm not at all saying this is going to work out. The market is a mess. Then you're looking at about 8% up to the 200 period moving average over, it could be 2 weeks. Could be 2 weeks. So that's a few of them here. Twitter was a rounded bottom breakout here. It's not an official rounded bottom breakout right now. Here's where I've taken a different attitude a little bit on the rounded bottom breakout. Years ago, before I traded options, this was my #1 trade. This is all I did. But I was trading pure stock. I mostly traded stocks under $20. And you could get some really cool moves from this rounded bottom. And what I mean by cool is great stock moves. We're talking 10, 15, 20, 30% moves from here up to the 200. I mean, this is 38% right here, and this is a $40 stock. So this was one of the, well, it still is when everything's right. It's just one of the best paying chart patterns, strategies there is, not a chart pattern, strategy. So this was a rounded bottom breakout, popped up. It's still a rounded bottom breakout, sort of. One of the things I always wanted on the rounded bottom breakout was you had to have at least 10% between the 50 and the 200. And then as you looked at a chart, you had to have 10% between where you're buying it and the 200. The reason I wanted that is it gave you a room to make money, is what it did. Well, here I've started trading options. So I've kind of lightened up on that, because at 6% from here to the 200, first of all, I'm not going to buy this unless I get an inside day. So let's do something, which I can tell you right now, I'm not buying Twitter. There's too much drama on Twitter. So say I buy it in this area, somewhere in the 47.55 to 47.60 area. That puts me at about 8.7% to the 200 on the stock. That's 20% on an option. So I have relaxed that because the option gives me the 20% that I want to make anyway. So I just a little tidbit there. I have relaxed that. While this is not an official rounded bottom breakout, I'm still going to look at it as that type of trade. Dennis, what do you believe are the 5 top candlestick patterns? My number one favorite candlestick pattern is a morning star. Okay. Now, I'm going to tell you what they are. I'm going to have to write them down, and I may have to scribble one out as I talk about this and change it. All right. So morning star is my personal number one favorite candlestick pattern. Number 2 would be a bullish engulf. And I'm going to write these down because as I say them, I might rethink that. And I know you're probably wondering, you haven't mentioned a bull kicker yet. And I'm not going to. And I will not make that in the top 5. Okay. I will not, and I will be more than happy to explain why. So, Morningstar, bullish engulf, hammer, number 3. That's 3. Let me do this for a second. I want to look at some charts. Oh, piercing candle. Number 4. And I assume we're just talking bullish. We can do the same thing bearish. Number 5, number 5, number 5, number 5, number 5. Number 5, I'm going to say a belt hold. Okay. I'm going to tell you number 6 only because I've already mentioned it. 1, 2, 3, 4, 5. Number 6. The almighty bull kicker. Okay. I have seen more people go broke on bull kickers because that is touted as the most powerful candle pattern there. And there's a reason why I've seen a lot of people go broke is because no one knows how to trade it. That's why. I'm not denying it's not a strong candle pattern, but it doesn't mean you should just arbitrarily buy it. Okay. So placement is important where you place your trade. And a bull kicker is not a trade right away. It may be a trade 5 days later, perhaps, or 10 days later, but not right away. Okay, there we go. Any questions on that? Any questions on that? Now, Dennis, while I've told you my favorite chart patterns, that doesn't mean that you just see a Morningstar pattern and you just arbitrarily trade it. Okay, that's not what that means. Let me share with you, well, not that one. We'll come back. Well, okay, I'm here with this one. Let me share with you a couple of favorite chart candlestick patterns. And one would be this one right here. And this is an Oreo cookie where you have a bearish day, not so bearish, and a bearish day. That's exactly how I describe it every single time. A bearish day, not so bearish, bearish. And by the way, that's coming up on the scanner. All right, we'll go see if we can find one more. MHK. There's a bearish day, not so bearish, bearish day. All right. So anyway, they're very scannable, and I think this is one of the best patterns there is. This is actually a good one right here, this PNW. That's a nice one for the bearish side. For the bullish side, I'm looking for my Fig Newton. Where are you? Huh. I have too many scans up. That's my problem here. And oh, there. Bullish day, not so bullish, bullish day. So let's take a look at this. You're looking at a healthcare stock. You're looking at a bullish day, not so bullish, bullish day. Fig Newton chart pattern in a 3/8 trap, in a trend. I'm going to have to flag this. I like that chart. I like this chart on a breakout of this area up here. So I would be a buyer in this neighborhood up here. So ultimately what I'm looking for is a rally up and then a pullback back into this area testing, and then some buying signals up here like that. Okay, let's see if we can find another one. Fig Newton, FCX. Fig Newton. This is it's a Fig Newton. It's also kind of a doji type continuation. Bullish day, not so bullish, bullish day. You know, a true Fig Newton would be, this candle would be down here. It's like the Fig Newton cookie. You got the outside, you got the inside, and the outside. Let me see if I have another one here that is a little more pure. That one's not pure. But you see where I'm going with. Well, at one point today it was bullish candle, not so bullish, and then, you know, about the, you know, down here, then you've got your Fig Newton chart, and you can see how it's moving up. So SNA, bullish, not so bullish, and then below that line would have been a Fig Newton. It, you know, started alerting earlier in the day. So those are a couple, you know, that's just putting candlestick signals together. Let's see, Lenny, can you show examples of how best to use a 3/8 trap for short trades? Let's see here. So I'm going to change my my 3. While for long trades, I use the 3 exponential high. For short trades, I'm going to change that to the low, like this. And you see how it dropped it down. So what I want is a trend to the downside, and we have that. And then I want to rally back up into that 3/8 trap. Now, not that this is the right way to do it, not at all. I would never short this because I don't see a candle signal for shorting. I see some dojis here, and dojis to me are the most overrated candle in the entire candlestick arsenal. It is absolutely the most overrated candle there is. I want to see something that says I can short it, and that tells me I can short it. Then I'm looking for a short on an inside day or weakness below that candle. If I was looking for this for a short, the only way I could short this would be below those lows, in that neighborhood, like that. So below that area. Let me see if I can find another one. XLI. Now that to me is a good looking short, even though it is a doji here. I would put this on my list for a possible short. I wouldn't short it today. I wouldn't do that. I would wait for that. I want to see the buyers in there. Honestly, what I want to see you is I want to see you shorting it first, is what I want to see. No kidding. I don't want to be the first person in here. And I don't even want to be the 10th person. I don't even want to be the 100th person in here. I want to see an absolute candle says, okay, this is getting short. Then I want to get in. One thing you guys need to know is I'm never going to be early to the party. I'm never going to get the super duper entries. I just don't feel that's a smart way to trade for me. So this thing has a lot of things going for it. It's a 3/8 trap. Here we are. There's the 3. Here's the 8. Clearly a 3/8 trap. We're snuck right up here against that 50-period moving average. So we now have a blue ice failure. By the way, this going through what I'm going through right now is one of those tools in the tool chest. Being able to look at a chart and find as many things as possible to put in your favor. It's called conditions. Let me do this. Well, we're going to do it in a circle. So this might be a condition. This is a condition. This is a condition. This is a condition. This is a condition. It's actually pretty rare to get 5 conditions. It really is. I mean, if you want to be really nitpicky, you could probably get 5 conditions. Let's do something like this. So okay, we'll do this. So we have a downtrend condition, a blue ice failure right here, condition. We have a evening star candle pattern condition. I can't change off this chart without losing all this. You'll just have to trust me. The SPY is in a downtrend condition. I did better than I thought I was going to get here. Really, it's kind of hard for me to get more condition. Well, the 50 is below the 200 condition. Okay, I did it. I did 5. So what you want to do is put as many conditions in your favor. Believe me, you don't have to have 5. You don't even have to have 4. You want to make sure that you can truly see that it's bearish. And now we can set this up for a trade. So what I'm going to look for is probably weakness below today's low. If it actually opened higher, and let's say it opened higher, and it did this, I could see me shorting that into the close tomorrow. And that would be a bearish engulf right here. So I could see that. Notice I'm not trying to chase it up here. I probably won't even try to chase it here. I'll wait till it's true, and then I will trade. Hope that helped. Did that answer your question on 3/8 trap? Sorry, I forgot what the whole question was. Let's look for another one. KBH. That's not a 3/8 trap. GE. There's a 3/8 trap. So here is failing the trend indicator, red on the red dots. You can see that we're closed below the T line, above the 3. So that makes the trap. We have an evening star here. So now weakness out of the trap would make me look at that as a short. There is nothing wrong with buying this inside the trap. Nothing wrong at all. So you can be short here. You can also be short here on the breakout below the trap. Does that make sense? FNG takes a day to find its head. Let's see, FNG. There you go. Oops, FNG. FNG. I don't have an FNG yet. Figure out where the mess didn't. Oh! I should have read all of it. Yeah. Yeah, where the mess hall is and where the chow hall is not in the regs book, is it? Let's see, Bobby, you like trading the 2-day high. Can you talk about talk about that a little bit. And I won't be able to respond while driving. No problem, Bobby. Thank you for being here. Just don't get in a wreck, okay? Yeah. Look, candlestick signals. Every trader in the world wants the best price out there. And every one of those people get burned. Candlestick signals, let me do this. There we go. So let's take a bullish, and how did I know to go there, right? That's what the scanner does for you. WRB, this is a bullish engulf. So this is a bullish engulf while it's called the wrong thing. I truly believe it is. But yet I call it the wrong thing, and it's just the way I was trained. But after understanding and studying candlestick signals, we truly call it the wrong thing. And you know, we'll look at this and we'll say that's a buy signal. No, it's really not. It's really not a buy signal. Okay, it really isn't. But that's what we call it. Again, I've just 30 years of doing that. Candlestick, that was the first thing that I learned was candlestick. So I mean it's ingrained. I don't know if I'll ever change that out of my vocabulary. But it is not a buy signal. It truly is not. It is a buy when you see follow through. So this, however, this is a signal. It's a signal to pay attention is what it is. It's a clue is what it is. So what we want now is we want to buy on follow through. This is now the tradable bottom. So now what we want is price action up here, and we're going to trade that price action. We might put a stop about, whoops, not whatever that was. We're going to put a stop, say maybe halfway of that candlestick signal. And there are multiple ways to put a stop. I just, for simplicity, I did that. And by the way, there's nothing wrong with that kind of stop. So when you talk about 2-day highs, that's what I want to see. I want to see if the candlestick signal, and by the way, we're going to talk about this as a buy today too. I want to see the current candle breaking out over the previous day's high. Well, if I just spotted this, now I have to wait till the next candle, or the next could be 10 candles. So what in the world do I mean by that? Blue, let's go blue just as a generic color. Let's say we do this. I don't care if it goes for 100 days like that. When it does this, we have now broken out over that candle. Now it becomes a trade, not down here. Look, I take trades down here, okay? I'm not saying that we're not going to. We are. But if you want to trade pure candlestick signals, you want to trade on the follow through, not the candlestick signal. That's where the 2-day high is. Now, let's think of this from yesterday or Thursday, I guess. So now what I'm going to do is I'm going to put a line at the top of Thursday's candle. This becomes a trade above Thursday's candle. So that's the tradable bottom. This is not the tradable bottom. This is the tradable bottom. See, this is where so many people, they go to all these candlestick webinars, and me included, I say the same thing. It's just habit. Sometimes it just slips out. Here's a buy signal, bullish engulf. That is not a buy signal. The buy signal, it is a clue, is what it is. The buy signal is when price respects that candlestick signal. We look at this candlestick signal as an anchor, as a, okay, if we get follow through from this candle, we are putting conditions in our favor, is what we're doing. So that's how this becomes a tradable bottom over this candlestick. So that 2-bar high thing. I think that's what you mean, Bobby. And I do like that. I do like 2-bar highs. I especially like that when I'm looking for intraday charts. I always want to see if I'm looking at intraday. In fact, I have a scan set up for trades that I am currently in, and I have it set up for 2-bar highs on the 15-minute chart. And that's because I'm not even going to get out of my seat for one 15-minute bar. I'm not going to change. The world's not going to change on one 15-minute bar. However, follow through, we could be leading to something, and I want to see that. So while I don't use intraday charts, I don't have any scans actually, intraday charts, except for trades that I am currently in. Then I have that set up to show me 15-minute highs or 15-minute lows. I know if I'm long or short, and then I can go take a look at that chart. Ricardo, I like buying a breakout. I love buying breakouts too. That's a nice. That's nice. This is a 3/8 trap right here. There we go. This is a 3/8 trap breakout. 3/8 trap Thursday. 3/8 trap breakout today. Beautiful chart here. This is one of the charts I was thinking about buying at the close, but I decided the market wasn't worth trading. Wasn't worth it. Let's see here, breakout. Do you buy the open or do you wait to see if it breaks and holds? I buy at all times during the day. Let me try to do this here. So here's the morning, and here's the morning, and I mean how many of these do I want to make? I mean, we could make one for every hour, every 15 minutes, something like that. So let's say this is the first half hour of the first 15 minutes of the morning. I'm not saying that I don't buy the first 15 minutes of the morning, but I rarely buy 15 minutes of the morning. Here's the top of the hour, maybe. Yeah, I could place trades anywhere here and above. The last hour of the day, which I think is the most important hour of the day, hands down, yeah, I'll place trades right there. But let's say I'm looking at this chart, okay? And the first 15 minutes rolls by. I don't want it the first 15 minutes. Guys, I have to tell you that your entry is not what makes you money. Let's stay with the long side of things. The entry is not what makes you money. It's what happens after the entry that makes you money, not the entry. So I never ever feel like, oh man, I better hurry up and get into this. Not ever. I just don't have to do that. You don't want to get caught up in that fear of missing out. You want to step back, have a drink, smoke a cigar, do whatever you do. Strut. Just don't get caught in that fear of missing out. Oh my God, I better hurry up and get in there. Because if you get in there too early, what happens? It's just a fake move and we come back down. So I never trade first 50. I say never, I have, but rare. Top of the hour after that, yeah. Yeah, so maybe 30 minutes, absolutely. Let's see here. Next question. Ricardo, I bought GFI. Let's see. GFI. You bought GFI. Let me bring my over. Let me eliminate this for a minute. Get rid of that. GFI. There we go. So what did you buy now? GFI, June. 15 strike. Okay. I can see that. That looks, no way. You know, somebody's going to have to confirm to me what was the open interest. Is there open interest here? Because right now I'm saying that is absolutely not a buy for me anyway. I bought GFI 15 strike June call, currently up 12%, currently 12% down. Okay, only one crack, one crack. So happy to hold and okay with the chart to a stop below 15. Holy shit. So you're telling me you're down 12% now and you're okay to be down 30, 40%? Because that's what you're going to be. How many wives do you have, Ricardo? You got a lot of them. Look, I got nothing against wives, okay? Seriously, I don't. I'm just saying, how many marriages do you have here? Yikes. Let me make sure I read this right. You bought GFI, 15 strike June calls, currently 12% down. So you bought it up here. Ooh. Only one contract. So happy to hold and okay with a chart to a stop below 15. Yeah, you're not a short-term swing trader in my opinion, but that's just my opinion, okay? Ouch. Ouch. Yeah, ouch. I mean, if you want, let's talk about that more. I don't know what to say unless you throw something else out there. Um, ouch. What exactly is a bell toll? This is what a bell toll is. I'm not going to look for one because they're kind of sort of rare. I'm going to do a blue candlestick. We can keep this candlestick generic. It doesn't have to be bearish, doesn't have to be bullish, just a generic candlestick. And then what happens is the next day we gap down and we come back up. Okay. We gap down and come back up. While we do not have to come above that low, that right there is a bell toll. It is preferable to, I'm going to only draw half the candle. It is preferable to come back up past that low. It is preferable to come back up better than the halfway mark. Okay. If the bell toll, I'm going to only use half that candle again. If the bell toll comes up here, then it's a bell toll that now became a bullish engulf. So it's when you have a gap down and it moves up. In my personal opinion, just an opinion, this is more powerful than a bull kicker. Bull kickers tend to have action faster, yes, but I think this is a more powerful candlestick pattern. Okay. All righty. Any other questions? Don't be bashful. I'm not exactly ready to quit just yet. Ricardo, it was one contract. Okay, I could see a very wide stop, but value is not huge. Okay, I'm not sure what you mean by that, but value is not huge for my account. I would probably close it early depending on the next candle. But Richard, when you buy the chart, you set up the stop. So when you bought this, you had to come in here and automatically say, okay, that's my stop. Well, trading an option, you're already 12% down. From here, you're looking at another 8% on the stock. That means you're 16, you're 20, you're 25% down plus 12% down. That's just unacceptable, I think. Okay, it's just unacceptable. It's just too far down there. So let's talk about breakouts because this was a good one. While you're looking at a pivot low, which I get the pivot low, just not if you buy way up here. Since this is a breakout, truthfully, it gets below 1570, you're going to be an unhappy camper. So to me, at minimum, that would have to be your stop. This is where I like to maybe look at the 3-bar chart and see if that helps me out. And which I could see this in the daily as well. But let's. I'm going to put 2 lines here. These are 2 possibilities that I would use based on the 3-bar chart, and here's what they represent on the daily. So I was close on the daily, and here is a higher number right here. So now look, this is just my opinion. It's just my opinion. I just feel that if somebody was to use pivot lows as a stop, which I'm not against that. Don't get me wrong. I'm for that if you're buying relatively close to that pivot low. But to come up here and buy way up here and have this for a low, then this is not a short-term swing trade. This is a longer-term trade. I can't necessarily put a definition on what longer term is, but you're willing to have some serious torture on yourself to see if this is going to work, or you just have it in your mind that gold is going to be a winner and you could really care less about your stop, which you might be right. Yeah, I'm not disagreeing with that. Hey, Ron, yes, this is recorded, yes. Take your stop loss into account. Divorce your scans. Not my scans, no. My scans, I can't, well, that's not true. I can scan for say a trending 3/8 trap with a stop. I can do that if I utilize the volatility stop. And the red line is the volatility stop. So I can set up a scan that says I want a chart doing this, that, and the other thing, and a 3/8 trap, and I want it to be within, say, 1% of the, or 5% if you're willing to make that kind of a risk, of the volatility stop, if I wanted to make the volatility stop my absolute stop. Now, I'm going to say this because I honestly don't know everything that's in the scanner. I only know what I know. Ed knows everything in the scanner. So I'm going to say right now until Ed says, whoa, back up, Rick, don't say that. I'm going to say there's no way to scan for a chart that includes your stop other than what I just said about the volatility stop. Now, maybe there is other ways. I just don't know what they are. So outside of that, what I scan for are things that I can look for as a trade. Let's see if there's another XLB. Let's go over here. I look for charts like this right here. Now what I come in here is I look for a stop. I could use things like the T-line for a stop. I mean, let's face it, why would I buy it? Because it's a 3/8 trap, right? Let me ask you this. I'm going to ask me this, not necessarily everybody here. Um, if 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 I like this because it's trending and doing other things and it's a 3/8 trap, and if it closed below the 8, would I be buying this chart right now? I can tell you right now the answer is absolutely a no. So therefore, my stop is going to be triggered. I wouldn't buy it here, so why hold it there? So that is one place that I might look for a stop. The other place, it's possible the trendicator. And it all depends where I buy it though. If I was to buy it way up here, no, I'm not going to allow that kind of room. Now that's only 4%, but seriously, are you going to allow a chart to do this and still be holding it? No, I don't think you are. So another thing is I might use price action maybe, all within this area though. Or I could scan for this and say I want to only be 1, 2, 3, 4, 5% away from the volatility stop, and then I could use always. And you know, saying that, just a second here. I just thought of something. Saying that you could use that volatility stop as a stop loss. I just thought of this. So what if I said I want to buy a 3/8 trap? I'm not going to utilize the T line here. I'm going to utilize the 17. So a 3/8 trap, I'm going to buy that, but I only want price to be a maximum of 2%, say, away from the 17, the trendicator. So if I buy this now, there's my stop. So I can do this another way. I can say I want to look for a trending 3/8 trap. I'm only going to buy in the 3/8 trap, and I only want to be a maximum of X% away from the 17. Yeah, you can. I know you can do that. So you can control how far you are away from your stop, assuming you're going to use a 17 as a stop. And I'm for some reason, since I said that, I'm kind of thinking, and if not, Ed could whip this out in a heartbeat. You want to set a stop, a maximum of X% away from the recent low, something like that, from that recent low. I know if it's not there, I know he can whip that out in a heartbeat. Something like that. So yeah, you know, thank you. Now that talking through this, you can set a chart up to say, look for a 3/8 trap, and you want to be a maximum of X% away from your stop. But now you're going to have to use, say, the volatility stop or said moving average, whatever. Well, yeah, whatever one you want to use, you can use one. And again, if you want to use the low of the recent low, you can do that. But I don't know if that's in there. But again, he could whip that out in a heartbeat. So yeah, you can. Cool. Yeah. Does that help, Dennis? I like recently low of the past 5 days. Yeah, that's an idea. One of my favorite scans is I could probably make one quicker find it on this mess I have. I have way too many scans, and I've moved things around too many times. Let me see if this is one below. By golly, it is. Holy moly. Let's look at CF. Okay. So I'm going to move this over here. Stay on top. we're going to put this back over here. Yeah, we'll leave those here. So one of the scans that's built in is called Bull Run. I think it's a top-notch scan. I always change things though. I just like doing that. Okay. One of my favorite scans is, and I do mean this is a favorite. It's below the highest high in the past 5 candles. Below the highest high of the last 5 candles. I know it doesn't say 5 candles there. It says user defined. If I click on it, you can see that it is 5. That is adjustable. It comes out of the box at 5, and I happen to like 5. So I leave it right there many, many times. So what is this saying? This is saying that I want a chart where price is below the highest high in the past 5 candles. Well, there's the high. And we're only 3 candles back. Today, Thursday, Wednesday, right? So what this does is it automatically gives you a pullback. I love that. And then you can set it up into a trend, which I'm sure this has got some trend in it, where if you have a trend and it pulls back, it almost guarantees you that kind of chart pattern. 9.9 times out of 10, 9.9 out of 10, you're going to have that rise and that pullback. Okay, with that said, you could do the same thing probably and look, and I've never tried this, so I can't say this for sure, but again, I'm sure it could be made, where I'm looking for charts that are trending. I'm looking for a chart that's in a 3/8 trap. I'm looking for a chart that's lower than the highest high in 5 days, and I want it to be higher than the lowest low in 5 days. So 1, 2, 3, 4, 5. There you go. And all you've got to do is if you click on CF, the chart comes up, but it doesn't automatically put a line on your chart. You're going to have to go back and say, all right, 1, 2, 3, 4, 5. There's the low. That's my stop. That is absolutely one way to do that. So if I bought CF, you're looking at 5.25%, if you're okay with that. And you could put a maximum in there. Okay, so very, very doable. ULTA, below the highest high in 5 days. Now, see, here's where I'm having difficulties with that. I mean, you could do it. 1, 2, 3, 4, 5. 4%. Well, 4% is not so bad. Yeah, 4% is not so bad. Yeah, so that might work. Absolutely. Cool. Not a bad idea. I don't think I'm going to do that, but I like to choose my own stops. But yeah, I can see where that might be helpful, perhaps. Yeah. All righty. Questions. Hey, again, I want to apologize. There was an absolute date screw up on my part when I sent out the email. Some people are not here because of that. Some people, like you guys, clicked on the room link anyway. Thank you. We're here. This is not the scheduled topic. We will pick that up. This is sort of we'll call it a freebie on my behalf, for my screw up. So it's sort of a catch-all. Anyone has any questions, and we'll pick it up. Next Monday, the 25th, is our next get together. All righty. Let's see, Rob. I'm not familiar with many of the trading terms you are using on your trades. Where should I start? Do you have any lessons, homework, assignments? Thanks. That's what this is kind of about, Dennis. That's what this is kind of about, to help that onboarding to make the best of your membership, the time that you have, and to sort of fast track it instead of milk it out just in the trading room. No, I don't have any terms. I don't have terms, a list of terms. No, I don't. Where should you start? Can you get in the trading room during the day? Can you do that? Must have lost Rob. Maybe Rob's out there anymore. So if you can come in the trading room, listen in, and post and ask questions, that's where you will learn really, really fast of these terms and things that you might have questions on. Okay. Most common trading mistakes you see in coaching. Most common trading mistakes you see in coaching. Dennis asked me that again a different way. Oh, 3 most common mistakes you see when I coach. Okay. Number 1, allowing losses to become too big. Number 2, trading before, and I'm going to give you a helping hand here. Trading before you're ready to trade. So here's what I mean by that. And I want to tell you a true story too. So let me tell you this first, then I'm going to tell you a true story. First of all, I don't believe in paper accounts. I think I don't believe in them. Okay, so I don't believe in learning to trade on a paper account. I do believe in a paper account for learning things like moving around, getting comfortable with, typing your ticker symbol here, moving over to the month, knowing that this is the call column, this is the put column, knowing that this above that line is in the money, out of the money, below it. Knowing that, learning that stuff, I do believe in paper accounts for that. In the mechanics of being comfortable moving around, I do believe in that, because the minute you put money to that, believe me, it's a lot of things that's all of a sudden coming at you. So I do believe in paper trades for that. However, I do not believe in paper trading your account and you saying, okay, I've made 39 trades and 36 of them have been profitable. I'm doing really good. Now I'm going to trade for real. I think that'll blow up in your face. I think that is a horrible thing to do, is trade with a paper account. And the reason why is until you put money down, no one's a loser. Not ever. I've never seen a loser. You put money in there, you've got skin in the game. That's what you do. So with that said, I think a person should never trade until you learn. So now you're stuck between a rock and a hard place. What are you going to do? Here's my answer. So let's say you're looking at a trade. Let's look at something that's not so doggone expensive. How about X? Let's look at X. You're going to trade X. While I think you should not really trade, I'm going to bend that a little bit. I think you should trade. But here's what you're going to do. You're going to buy 1 share. 1 share. Don't buy options. Unless you are a successful stock trader. Then you can buy 1 contract. But you have to be successful first. A successful stock trader. Successful doesn't necessarily mean you're making tons of money. Successful means you can tell me about this chart. You can post out here about this chart. Successful means that you've made a number of winning trades in a row. It just means you can put together a good trade at the right time. When you can do that, then maybe you can move on. But until then, trade one share. One share. So, first of all, somebody's already doing the math, and you're probably thinking you'll never make any money at it. And I'm going to think you are absolutely right. Your job is not to make money when you're learning. It is not to make money when you're learning. Here's the good side to that. You're not going to lose any money either. That's the positive side. So share one share. It's like paper trading. You're not going to lose anything. You will lose money. Okay, you will. There's a cost to putting on a trade. There is a cost. So you will lose money. But let's face it, what education was ever free? None. Not one education that you've ever had in your life was free. So why is this any different? Why should it be any different? It shouldn't be. So there is a cost to it. Yeah, it's going to cost you to put the trade on. Whatever program you use to put on trades is going to cost you. But that's cheap education. Now you can trade this market. Now you can trade long and short, and you will learn how crappy this market is at this singular moment. You will learn that. But you'll learn it in a way that you can afford it. And that's what counts. When the market is right, because the market is not right now. The market is wrong right now. When the market is right, you will be ready to trade. So if you're looking at a chart like OKE, why not trade it? One share. Just trade one share. Just an idea. All right. Let's see here. The other mistake. Fear of missing out. Fear of missing out. And that is sorry, I'm going to use this stock here, okay? GFE. GFE gaps up. I have to rush into it. Fear of missing out. That to me, that's what this is. Fear of missing out. So rush into it when you've got this top up here. You're running into resistance. Don't be fearful. Don't feel like you have to. There's plenty of time to get into this chart. To start with, you're not entering. The trade is not about the entry of the chart. If this is truly going to be bullish, it will move higher. It will move higher. If you want to put some kind of mechanics on it of where it might move to, you can go in here and use some sort of a Fibonacci retracement tool, something like that. There you go. There's some targets for you. Okay, now I'm going to delete this. So there's some targets for you. So upon a breakout, which I'm going to move that a little bit. Upon a breakout here, is it possible it can move to 23? Of course it can. Well, that's 34%. How about 22? That's 28%. How about 20? Well, that's 16%. This one might not be any fun. Yeah, let's go with this one right here, 16%. That's upon a breakout. So let's just move that up. So right in there. So now let's do this. Let's do something like that. I'll move that up to there. So if this moves up to here, what's wrong with putting that trade up here and go to that? 16% trade. That's enough money. That's plenty good money. So there's another way to trade this too. Now that it's gapped up, I think it's a terrific chart, by the way. I'm not picking on you here or anything in this. This is a great chart. It's just that I don't want to chase it. I don't want to get caught in the fear of missing out. So what I'm going to do is put something in there like that, and I am going to flag that. That is a nice chart. So now I'm going to wait for the setup to come to me. Okay, so here we are up. I think I'll wait for it to come back. Maybe it sets up in a 3/8 trap. Maybe it just sort of tinkers around for a day or two and then gives me a reason to buy, and I would buy that reason below the resistance. I would do that because that's setting up into a nice little chart pattern. Pop out of the box kind of chart pattern. So fear of missing out would be something that I think is new traders get locked into. Yeah. Let's see here. What hours are the best to run in the trading room? I'm in the trading room from 8:50. Well, I'm in there for pre-market chat for about 20 minutes, 15 minutes, from 8:50 to about 10 after 9. Then I'm back in there at 9:30 Eastern time. I'm there for an hour. I go to lunch. I get back at 1 Eastern, and then I'm there most of the afternoon. So really the only time I'm not there is between 10:30 Eastern. I have to switch everything from my time to Eastern time. From 10:30 Eastern to 1 o'clock Eastern. Because I take, 2-hour lunch. Yeah. Oh, Mike, I didn't even think of that. Yeah, Rob, there is a load of YouTube videos. Thank you, Mike. I didn't even think of that. There's a load of YouTube videos. Just YouTube, Rick Sadler YouTube. You'll get there. Thanks, Mike. I totally didn't even think about that. Ricardo bought some FLR. No, stock only this time. No stop. Not as scary. There you go. Yeah. So stop, not no stop. So stop is not as scary. Yeah, I agree with that. Yeah, the stock price, it's not going to be quite as scary. So, let's talk about this again. Let's talk about this trade, okay? And thank you, Ricardo. I'm going to thank you ahead of time. All right now, thank you. So let's talk about this. The market. Can anybody in one word, you only get one word, and we're all adults, so feel free to type in any word you want. However, if it's a word that I can't mention on the recording, I won't mention it, but everybody here will see it. One word, can you describe the market to me? Anybody? Don't be bashful. Bearish, bearish, bearish. I can use those. Chop shop. I can use those words. Down. Yeah, I can use that word. Anyone else? So here, I'm going to put these in order. Bearish, down and bearish, they go together. Chop shop. That's a great word for this. Okay. So now let's go look at FLR. Why would we buy FLR? Don't get me wrong. I think it's a nice chart. Okay, I do. But why would we chase FLR? It's up one day. It's gapped up, and it's the first breakout. It's the first breakout. Why would we chase that? Now, there are a couple reasons why. One, you're willing to hold it down here, maybe, okay? You're willing to hold it down there. I get that. And I do that often. I'll buy something, and I'm willing to let it slide to the downside where I can actually buy more. I get that. Nice bottom right here. Nice chart. I get that. Nice chart. Ended up good volume today, good volume yesterday or Thursday. Nice chart, I get that. But you're going against the overall market. So why, and you said you bought it at 5%, so you had to buy it high, real high, maybe at the high, if you're down 5%. If you, was it 5? So stop, not as scary. Oh. You're not down 5%. Your stop is 5%. So see, I guessed on your stop. I learned from people. So, okay. But again, why would we buy this right now? I've stated the only reason that I could possibly think of is you're willing to carry it down until it works out. Things like that. So we've got a market that my word is crappy. I can say that on the microphone. Crappy. So why would I want to chase something? And this is chasing. This is fear of missing out. Fear of missing out. If you're a short-term swing trader, if you're buying this and you're going to marry the stock, that's different. Then you're not chasing. You're just simply stacking up. Ricardo, you're stacking up a bunch of wives is what you're doing in here. So how many more wives are you going to get? I'm dead serious about that. So so what I would be looking for is let it truly break out. Let it break out. Let it do its thing. Prove. And then let it prove it can come back. I'm going to change the color here. Let it come back, and then where support is, start watching for those bullish signs right there. Nice. I like that, Ricardo. Only two shares. I love that idea. Believe me, I think super. Thank you for sharing that. Thank you. Okay, then right there you've tossed everything out the window I've just said because you're learning. You will learn. You will learn doing that. You will see that while this is very possible it might work out, you will learn that as a rule, as the higher probability of the trades, this is not going to work out for you as soon as you want. I'm not saying it won't work out. I love the chart. It's just that there's way too much risk of consolidation. Risk. I'm not saying it's going to do that. I'm just saying there's too much risk there. So we don't want to chase. Don't chase. All right. Anything else? Anything else anyone wants to talk about? Here's a chart that I kind of like is AT&T. It doesn't look that great. Nice bottom here. Here's a big move to the upside, and now we're just consolidating. So as a trade, I'm looking for this to get to this 2070 area, and then from there, I think it can go to 22, and then we'll fill that gap up here at 23. So I mean, I can see this as a buy here maybe, and then watch this area up here, which is only 5 to 6% away. This is where the money is made, 13% and then 20%. Though that's, this is a steady eddy. This is not a hot shot stock, but it's one I'm watching for an entry somewhere up here. It's going to have to stabilize a little bit more for me. What else do we got? That X. I like what X is doing. X is like that FLR you bought. It hasn't broken out yet, but that's what I want to see. I would like to see a breakout here, or what I will take is a bullish candle in that area, and I would buy that early. So like at the close of the day, if we close with a bullish engulf in here, I would likely buy that before it broke out. What else is there? Really nothing. A lot of shorts right now. Energy's good. Energy seems to be acting good. I held OXY overnight. Yeah, I bought some OXY today. So that needs to move up. Yeah. You got out of Thomas. Yeah, see Thomas, and this is one of those cases where I like the chart. I really do. Wins earnings. Earnings is a little close. But let's take earnings out of the picture and just talk about the chart. I like that chart. And I'm assuming you're in somewhere up here and now you're out. Smart move. You know, while I can see why you bought it here, I truly can. It had no follow through. I still like the chart. It's just not ready to be bought, in my opinion. And if it comes back up and gives us a buy signal, I see that as a buy. Just keep in mind the earnings. That's going to be the big thing. I would buy X on consolidation or a breakout. So I guess I should have just finished that too. So if X breaks out like this, then I would buy up here as well. If it breaks out, I need to see proof, consolidation, and then buyers come in. That's to me would be the most proof I could have. But I would buy it right here if it was a bullish candle in there. So either there or here. Bobby says, I think I'll try that one, 2 shares, also because a lot of times I'm not good with losses, but I'm also afraid to let your winners run. Don't be afraid to ever take profits. You don't have to close the whole thing out, but you could certainly take some of the profits. But the buying a couple shares, you won't make any money. Yeah, you will not. There's in no world will you make money, but you won't lose money either, or well, very very little, tiny money. Something very affordable, unless you just never sell it and it goes down. So it's a way to trade for real, but you have some built-in protection, but you'll never make money on trading 2 shares, 1 share, 2 shares. So risky bottom box. If this is a bullish candle, man, I would take this all day long. What was that? That W. I kicked myself for not buying this one. That right there. I could have bought this one while it was still right here. Bullish candle. But what happened was, and I'm not, you know, I'm not. I lived by my rules. The market was cruddy, so I didn't buy it. But it kept moving up, and I'm okay with that. To me, the market was not viable after the first hour this morning. The market just went horrible. Now it's just a different trade, is all it is. Now it's a trade like this, looking for something in this neighborhood. This would be my buy box. So now I'm going to look for consolidation to the right. Something, rest, and then when I start to see buyers, I'll take it. Now, with that in mind, look what chart pattern I'm doing here. A rally up and a pullback, and that's what I'm looking for. I look for the same chart pattern every single time. No difference. It's a rally, a pullback, and up. Doesn't matter if it's here, rally, and a pullback. Could have bought that there. Or a breakout and pullback. It's the same chart pattern over and over and over again. Yeah, this is a nice chart. Nice Polish uptrend. Here, we can find some more of these if you like them. What's AKAM doing? AKA, yeah, the voice control is not working. AKA, look at AKA. You know, I'm joking because I say that jokingly, and I've had people to say, "How do I get voice control?" There's not. It's my fat fingers aren't doing it right. See, here's one that's trending, might be coming up. MOS. Hey, that voice control worked. MOS is one. SWN. SWN might be one. Yeah, I can find those, and these are all on the scanner. Gold. I need the buy signal. We're trending. I need that buy signal. So if I had a bullish candle like this tomorrow, if the market was reasonable, I would buy that. Um, if I didn't, then I would simply look for a buy signal up here like this. And it would be, there's the up, and now I'm looking for the pullback proof and the green bar in there to buy. What I'm seeing at X, then you can't buy it, no, under no circumstances. And I'm dead serious about that. Under no circumstances can you buy it. If you can't see it, you cannot buy it. So here's what I'm looking at. The trend is moving up. Now here's where it gets important. A trend is what I want. I'm waiting for the buy signal now. I don't have a buy signal yet. I said I would buy it here on a big bullish candle. So, you know, I'll draw it this way instead. I would buy it there. And I would buy it in this area up here on a breakout because it will have broken out of these highs. So you've got a bullish chart and we have a pullback. That's exactly what I'm about right there. It is not a buy right now, in my opinion. I would buy it on a bullish candle before a breakout. And if I don't, I will buy it. I will look to buy it above that up here showing proof. And I'm serious. Under no circumstances can you buy this now. Somebody said homework. You want homework? Write a page on why you would or wouldn't buy X. Guys, I'm serious as a heart attack. Look, I don't know if anyone here has any experiences writing an ebook, okay? If you don't, all an ebook is a couple pages on whatever subject you want it on. So you want to do yourself a massive favor, create your own ebooks for you. You know, down the road, if you could do something with them, good for you. But write a page on why you would and wouldn't buy this. Write a page on where you would buy this and why. Or under no circumstances would I buy it. Write that down. So I'm looking at this trend. I'm looking at a pullback. I am saying I'm waiting for a bullish candle and or a breakout where I would buy it. Now, let's do this. Let's get rid of this right here. I'm going to go to a naked chart and see if that doesn't look any different to you. So here we have a trend, and now we're putting it in a little rounded bottom. Can you see where that breakout sends that up? Can you see the J-hook continuation working in there? Let's try it a different way. Let's take this chart, and rather than go to a faster time frame, let's go to a longer time frame. By the way, folks, I think this is better for you than a faster time frame. I may have mentioned that the other day. 2-day chart, 2-day chart. Can you see how this is? It might show up a little better for you here. We're up, we consolidate, and now we're trying to we've put in this bottom. Maybe I've got too many arrows there. we have this bottom in here. See where we're down, and now we're trying to trend up. Let's try a 3-day. 3-day, 2 bars of consolidation. We have the low. Now we're trying to trend up. Maybe 4-day. I see a pop out of the box shaping up. Let's see. How do I do this? Frame. There we go. I see a pop out of the box shaping up right here. I see another candle pattern too. I'm going to manipulate it a little bit because there's not. First of all, there's nothing in trading that adds up. Nothing. 2 + 2 never equals 4 in trading. Accountants and engineers have a heck of a time trading because that's not right. Everything should add up. It doesn't. So I'm going to manipulate this just a little bit. And what I'm manipulating is I'm going to put this line here on the bodies. Okay. Now this line, well, no, I can do it. By golly, I can. I'm going to put that on the bodies. It looks better when you put it on the tops, though. I will say that. It looks better. You have an ascending triangle. And the truth is, I can put this on the lows, too. You have an ascending triangle, and that's bullish. Here's a weekly chart. Oh, okay. I like that. So here's a weekly chart. Here is a, here we're up, and here's our flag right there. I'm going to get rid of that, change that, see if that looks any better. We're up. Yeah, that looks better. Oh, I wanted to go to that candle. Now we've got a flag here. Remember early on I said I like the bodies. I lay most of my stuff on the bodies, although I'm not nearly that critical of it. I'm usually sloppy. We have a flag. We have a breakout here. While this is not an official Morningstar signal, do you see the possibilities right there? Down day, there's your star, and now we're trying to move up. Now remember what I said, that I'm looking for a bullish candle or a breakout. And then a bullish candle in that, well, not necessarily a bullish candle, but looking for it to roll up, pull back. Whoops. It's supposed to be green. It's supposed to be an arrow. It's supposed to be green. There you go. Like that. Okay. So now you see what that looks like? That actually looks pretty good, doesn't it? I think it does. Here we've broken out. We rallied up, and we're just consolidating right now. Nice chart. Watch for the bullishness. That's what we want to see now. Right. Only on the breakout. Right now, it has 3 weeks tight. Most action inside the bullish candle. And this is why I want this on my watch list. And this is why I said I will look for a bullish candle, or up here in the breakout. If I don't get this, then I'll wait for the breakout up there. Like that. So I see the chart pattern here, and I see the possibilities. Now I'm waiting for a couple of clues that will tell me that the possibilities are starting to shape up. On the same token, I also see that we're moving sideways, and if I see something like this, then game's over. It lost its credibility with me. And if it does that, you could have a short down to that 50-period moving average. All right. Anybody want to ask a question? Otherwise, we've got to cut it off here. Don't be bashful. Hey, again, thanks everybody, and thanks for putting up with me. I do apologize that I messed up the date. I was bummed. I really was. But we're going to continue this. Look, okay, you are all here because you bought a membership, okay? And my goal is truly to make this work for you. Look, I cannot say you're going to make any money this next month. I can't say that. The market is garbage right now. What I can tell you is I'm going to teach you a lot. My way is not the only way, but this is what we want. We want to interact. We want to find things that work or don't work, or where we can stack probabilities up, things like that. There's hundreds and hundreds of ways to skin a cat or catch a fish. That might be a better way, right? Might be 100 ways to catch a fish. Just the way I catch the fish might not be the best way, but I want to share my way with you because that's the only way I know. And then you will learn many ways to do this. So I wish the market wasn't such garbage right now. It is, though. And I'm not going to lie to you. I'm not going to candy coat this and, you know, blow up everybody's skirt and say, hey, we're all making money. That is not true. That is not true. I'm not making near the money I've made in the past. This is a rough market. And you've got to know you've got to know when to back up. Press the pump the brake pedal a little bit. You've got to know when to say, okay, this is not good for me. I said that in a room today. Okay, I need to back up a little bit. And then I ended up buying a couple positions. So you just, a great time to learn. You're right, Dennis. And be patient for when this market gets bullish, and it will, or when the market gets good and bearish, and it will. So here are some things that I'm looking for. I got to tell you, I love, let's use this. There we go. Let me get rid of this. There we go. I love this little tool right here. And guys, first of all, don't panic. It's nothing more than the 17 exponential moving average. I swear to you, that's all it is. We just learned in TC 2000 how to manipulate it to make it turn red and green. All the red and green is when price, I love using yellow on this black background. When price is above, these dots are green. When price is below, these dots are red. I love this. So my goal is to be long and be short. Be long. I'm not sure 3 dots are going to qualify as to being short. Be long, be short. Be long. We are qualifying to be short here. Okay, we are qualifying. So if you want to be long this market, now with what I'm about to say, keep in mind there are pockets of long trades to be had out there. Insurance seems to be good. Energy is good. Agriculture is good. They're good. Just don't take them for granted. That's the only thing. Don't take them for granted. So what I'm going to watch for, as long as we stay red, I'm going to focus mostly on some shorting. Mostly. When this turns green, then I will focus on the green, on the bullish charts. I guarantee, and I'm not supposed to use the word guarantee, but in this case, I guarantee we will see a string of green dots. What I cannot tell you is when that's going to happen. We will see a string of red dots. I cannot tell you when that's going to happen, but I can tell you it will happen. So the key is to wait for your time. Wait for your time and don't chase. Don't chase. How would the indicator look if it was set to high-low? I can do that. First of all, let me make sure that this is it. Yep, that's it. So let's do that. There you go. It changes it so little it won't matter. It won't matter. You could change it to simple if you want. It really won't matter. All the Trendicator is it's saying that you believe in a moving average. That's all it is. And I believe in moving averages a huge amount. In fact, everything I do is based off a moving average. A 3/8 trap is nothing more than an 8 exponential moving average and a 3 exponential moving average. That's it. So all it is taking your world and putting it around a particular moving average. That's all. You want to change this to 25. There's the 25 simple. Now you're trading around that right there. Turn in the exponential. There you are. All you're doing is you are saying, let me turn this back into a circle here. There you go. You are saying that this is the world of trading. Now, what I'm doing is, or in your circle of trading, you know that that's too big of a circle. You need to fine tune it. So what you're doing is you're fine tuning it. And you're going to fine tune it a little bit more and a little bit more. Maybe even a little bit more. Maybe that's your world. And that right there might be all a little above and a little below that line right there. Maybe your world is the T-line. I know people that trade the T-line. That's all they do. That's all they do. That's their world. Price is either working above it or price is working below it. That's all it is. They don't bottom pick. They don't try to pick tops. They watch for price to be bullish, and that's what they do. This, when it's green in the T-line world, this is what we would call a T-line run. T-line run. And a T-line run to the downside. We don't use those terms with, say, the 17, because that's a term that we only use with the 8 or the T-line, 8 exponential moving average. I'm going to put this back here like that. So that's all you're doing is bringing your world to something. Yeah, no, Dennis, don't be sorry. This is how we learn. We try this stuff. Doesn't make a difference, and you know it doesn't make any. Would you say open, high, low? It made hardly any difference. Not a difference that would matter. It really wouldn't. So anyway, I love this little tool right here. Let's look at this chart, and then we got to go, okay? Where is it? This chart, right here. Look at that. So, WRB, we've looked at this several times tonight, right? Here, somebody said homework. Here's your homework. Go back, and where could you have entered this chart? Based on, and that's harsh when you go from that dark to the light chart, and it's harsh on your eyes. Look at that chart. There was definitely moments of bearishness. But just go back and look at that chart. How could you have been long that chart? XLB. This point right through here. When we turned green from this point to where we are now, where are the trades? From this point up here down to this point. Find the short trades. There's your homework right there. Now find the short trades. CF. Look at that. Come on, let's don't count that one, okay? Well, even if you do, look at the trade from here to here. Where could you have gotten into that trade? Here's another way. This is the 3, the 8, and the 17. No price action. You see those pullbacks? Those are where your opportunities are. The pullbacks, and just as they start moving up, that's where opportunities are. Here's that WRB that way. Opportunity, 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 opportunity. What was the other one? XLB. Look at that. Here we roll up. Opportunity, opportunity, opportunity. It really looks different when you look at a chart like this and you take the micromanagement of candlesticks out of it. Yeah. All right. Let's call it a night. Thanks everybody for being here. Again, thank you for putting up with my mess up. I hope today was right here was okay, and we'll get back on schedule. Okay. This is recorded. I will get it rendered. No way I'll get it rendered like in the next hour. I'll try to get it rendered and then send it out late tonight or early tomorrow. And then you'll have a copy of this if you really, really, really want to watch it. Way too long. Thank you all for being here. I truly appreciate it, okay? Beer time, I hear you. We'll see you later. You guys take care. Thank you.